Welcome, ladies and gentlemen. This is Sanford Khan. The title of this presentation is very simple considering the state of the stock market. How to shrewdly invest in the stock market that's gone insane. What I mean by insane, it's a speculative frenzy. Valuations are not only through the roof, through the stratosphere, they're in outer space. Just look at some of the tech stocks. This is a bubble stock market. I don't care what anybody says, any financial planner, financial advisor, or whatever. This market is a financial bubble. And I think I had a video about bubbles that I made some time ago. It's on my YouTube channel. The first law and only law of bubbles you need to know is that all bubbles eventually burst. I can't tell you when or what could cause it, although I have some ideas what might cause it, but that's not the part of this presentation. It will burst and people will get hurt. So how do you shrewdly invest in this type of market? I'm not going to tell you what stocks to buy, but I'll give you some ideas, some time-tested ideas. I suggest that you look at the dividend aristocrats. What are the dividend aristocrats? These are stocks that have paid continuous dividends for at least the last 25 years and have increased their dividend every year for the last 25 years. These are well-managed companies. They have to be because they're paying out cash to investors. Whenever a company's paying out cash, hard money to investors, they have to manage their enterprise, their company shrewdly and efficiently and responsibly, or else they'll go bust. It's an honor to be in the dividend aristocrats. When I first started to look at the dividend aristocrats, there were 50 stocks in it. Then it went up to 54. When I looked at it last night and looked it up on Google, there are now 64 stocks in the dividend aristocrats. You could find out what these stocks are by going and doing a search in Google. Just say, what are the stocks in the dividend aristocrats? Or what are the dividend aristocrats? Just like that. And it'll pop up. They'll get a whole list of things you could click on, and they'll give you the companies in the dividend aristocrats. Look at the companies in the dividend aristocrats. Find the ones that you think are suitable for you. Suitable for you. And buy those and collect the dividends. Do something that's called dollar cost averaging. This has been around for a long time. What you put in a certain amount of money over time, a certain intervals, like every month or every quarter, every 4 or 5 months, you invest a certain amount of money, and you average the price of that stock. Let's say it's company ABC, okay? You buy a few hundred shares of ABC. 4 or 5 months later, you put in some more money, and you buy some more shares of ABC. 4 or 5 months after that, you put in some more money, and you buy some shares of ABC. Sometimes the stock price will be up, sometimes it will be down, but you dollar cost average the company's stock. Over time, this is proven to work. Meanwhile, you'll be collecting increasing dividends. That's money in your pocket. And it's been shown that in companies that do this, they perform well over time. The high techs, yes, they have beat them, but we're in a frenzy. We're in a speculative frenzy with the high tech stocks. There's also another strategy for those who are more sophisticated, and I'll get into that right now. And I use it myself. And it's a conservative strategy. It's called covered call option writing, where you sell somebody the right to buy your stock from you at a certain price within a certain time limit, and they pay you money directly into your account. If you want to learn the strategy, if you're dealing with a brokerage firm, they may have pamphlets on this, but you could just go into Google and do a search and just say, what is a covered call option writing strategy? Or just go covered call option writing. And I'm sure a lot of things will pop up and you could just learn it that way. It's actually very simple, but the best way to learn it is for me to give you an example right now. I'm not recommending this. This is just an example. I don't want any of you doing this and then writing me a letter saying, Mr. Khan, this has not worked out for me. I should not have bought this stock. I'm not recommending this. I'm just giving you an example of how it could be done. Let me get my glasses here. This is only for more sophisticated investors. If you're not, just do dollar cost averaging. Find a stock in the dividend aristocrats that you like and dollar cost average it over a certain period of time. It could be every month, every 4 months. You could pick it. It's whatever is best for you. So let's get into an example with a dividend aristocrat stock and how to sell covered call options. Just an example. One call is equal to 100 shares of stock. A call gives somebody the right, but not the obligation, to call one call to call 100 shares of that stock away from you within a certain time period at a certain price. The price called the stock is called the strike price. So let's look at one of the dividend aristocrats that's pretty well known. Let's look at IBM. IBM closed today. This video is being done 12/22/2020. 12/22/2020. It closed at $123.62. $123.62. Let's say you go out and you sell one call. You give somebody the right to buy 100 shares from you. You may have 300-400 shares. I'm just doing it on 100 shares. You can multiply it if you have more than 100 shares and you wish to do that. But let's just say on 100 shares of IBM, you want to give somebody the right to buy from you 100 shares of IBM between now and March 19th, 2021 for $135 a share. Don't forget it closed at about $124, rounding it off. And you're giving somebody the right to buy it from you between now and March 19th, 2021 for $135. So it has to go up. If it goes up to $135 or above, it will be executed. Somebody will call it away, but you'll make more money. How much money will you get into your account? It's called premium. Somebody will pay you using the closing prices as of today. That's 12/22/2020. Somebody will pay you $220. That's the closing price of that call. $220 immediately into your account. That's your money to keep, period. You can do whatever you want with it. Go to Vegas, go have a good dinner. Of course, that's assuming your governors and local officials haven't closed all the restaurants like they have here in California, which is another story. But hopefully they open up by the middle of next year. That's $220 is yours, but it could pay for your Christmas presents. Looking at it that way. That's for sophisticated investors. That's just one strategy. That's only for people who wish to do this. Anyways, look at the dividend aristocrats and dollar cost average. Find some stocks or stock that's suitable to you. And suitability is the main requirement. And dollar cost average it. It's a simple strategy, but keep your life simple. It works out if you just keep it simple and not complicated. Anyways, until we meet again, may all your investments turn green. And remember, in 2021, be solvent. I appreciate if you could pass this video on to other people and subscribe to my YouTube channel. Take care now, folks. See you again. Bye now.